Very much, Jerry. Appreciate that introduction. Look, my presentation this morning is pretty much broken up into three parts. I want to look at some of the trends that are happening out there in copper and in the copper exploration side of the business. Then I just want to focus in on some of the due diligence work and the methods that we use when we're checking out projects, not just for copper, but right the way through the commodity chain. And finally, just a few notes for investors out there who might be looking at opportunities and maybe what would be the right questions to ask in this arena today. So I just really want to start off by focusing on some of these amazing statistics that are coming out from on the World Economic Outlook. The last quarterly statement from the International Monetary Fund really was showing that even with all the volatility that is apparent in the world today, things are looking pretty good. Overall, for the next couple of years, we're looking at 3.5 to 3.6 growth, which is not bad at all. Advanced economies still pushing in the right direction. And most importantly, they are looking at emerging markets and developing economies. You know, you're looking at quite incredible growth rates predicted for the times that we think we're in, up to around 4.6, 4.8%. And on the back of that, I think this is where it's starting to get exciting for everybody in the copper business. And because it is really the commodity that's most connected to the world's economic recovery. Everyone I spoke to out there this morning, we were speaking about, well, what's all the new things that copper's coming into? And of course, the revolution around the electric car industry is probably one of the biggest ones that we're all watching, and the extra amount of copper that will be needed there. So affirming recovery without any doubt, and I think overall looking ahead, it's looking pretty good for a commodity that's closely connected to that copper. On the pricing side, we work closely with S&P Global Market Intelligence and SNL, and we get a lot of our up-to-date data for there. You can see pretty well, I suppose, on the pricing side. Recently, things are definitely on the up. You can see that rise in the graph. It's quite pleasing for anybody that's selling copper at the moment. When I think they had a holiday in London yesterday. When I last checked the copper price on Friday, it was beautifully positioned at, on the cash price anyway, at about $6,714 US. So quite a turnaround in the space of a few months. And also, interestingly, when you look at the warehousing numbers coming out of Shanghai and London, you can see that those warehousing numbers are starting to drop as well. See that just here and here. So, you know, that paints an interesting picture. I know it's pretty early stages, but I think it's enough for people to start getting a little bit excited about on the copper front. What interests me most as an exploration geologist is not so much copper mining or even the processing of copper, but just where do we sit on the exploration side. And again, looking at some of the trends that have been reported over the last 5 years, we really do see a massive drop-off in what the Americans call initial copper resource announcements, which here in Australia we like to call maiden resource announcements. They really have declined a lot with the exploration budgets. I suppose what I'm just trying to show here, that even though the budgets have dropped, there's still people out there discovering, even though a lot of money has been spent on that side of things. Just to break it down, looking at last year's snapshots of where the money was being spent in exploration for, say, $1.5 billion on the copper side being put into exploration projects. You can see Australia sits pretty decently there. Latin America, as you would expect, getting the lion's share of exploration money at the moment. And I suppose if you look at the same type of money there in 2016, where it's been put into, again, a lot of people going for the safe bets around the mine sites, looking at the brownfield stuff closer to mines. But the grassroots exploration dollars are now being spent, still only making up probably a third of what is out there at the moment as of last year anyway. But it's encouraging. Money has been spent in that field again. just finally, just giving you an idea of the company breakdown of where the money has been spent. You can see the juniors, intermediates, they're out there. A lot of money being spent by the majors on exploration, but it is healthy to see that the juniors are out there spending money again, even though we'd like to see a lot more of it. I suppose I took a quote from Manilow of this year. I think July he wrote a paper saying explorers are playing it safe, and I suppose you wouldn't blame them either, because it's getting harder to find the cash at the moment to get out there. What they have been doing, explorers, is that they're getting very, very efficient at spending their dollars on the exploration side. Just a quick look there on the low exploration budgets in 2014 really did force companies to be more selective, and you saw them concentrating on areas where probably the most promising deposits would be found. They weren't going out into the real wilds looking for the big elephants just yet. And the data that's out there, again, just shows, that a lot of the work is concentrated, well, last year anyway, in and around or over the last 5 years on mine sites and brownfields exploration. Just, I suppose, a map to close out this part of my presentation. I suppose this is, showing you where people are getting the bang for their buck in terms of copper exploration, the money that's been spent, and any of those areas here, and I'm happy to say Australia is one of them. And got some decent deposits shown over the last, since 1990, 2016. As you'd expect, Chile, Peru, just some phenomenal discoveries there over the last 15, 20 years. But thankfully, you can see Australia, is not afraid to get out there, spend some money, and hopefully we will be rewarded in Australia with some new discoveries pretty soon. On the due diligence side, I just want to home in on that for a few minutes. And the type of work that we're normally asked to do our own projects is getting in there, understanding what the risks might be in the development. And just for people that in the audience that may not be that familiar with the different phases of activity from exploration right through to mine production, we normally break it up into 7 phases. Looking at the type of work that I enjoy doing, just strategic exploration, getting out there, looking at what might be discoverable, so to speak. On the concept side, again, a lot of that we would call back of the envelope type, getting an understanding of what the project might be, if there is something worthwhile looking at in the deposit. Scoping studies, it really does push into looking at major options and identifying how you might actually mine this particular deposit. The pre-feasibility study is where we really start to get serious on how we might mine and different type of options we'd select. And then pushing right up to the definitive bankable feasibility study stage, right through to operations. Each of these phases, we do look at decreasing risk. And when we home in on our due diligence studies, we just really want to understand at what level the project is at. Exploration and mining, as we said, it does carry a lot of elements of risk, but as I say, following that chain up, we can decrease those. The due diligence, it really does try to get in on as many material facts about a project as possible. And the primary step for us is really understanding what those major elements of risk are. And a lot of that does revolve around geology and resource estimation. Normally, we're asked to do it very quickly. We're given a week, maybe 2 weeks to look at the data and get back to whoever has asked for the process to be started. We need to identify a team very, very quickly of multi-skilled and highly experienced people. They're normally principal geologists, principal engineers. We don't normally rely on all the data we're given. Clients, they can be really upfront with us, and sometimes we just have to do a little bit of extra digging to find out what is actually available about a particular project we're asked to look at. And we also would really push hard to get a site visit on if we could, if the project is actually developing up to a feasibility study level. Tools for due diligence. If you're out there and you're wondering, where can I get a lot of data about a particular project? To be honest about it, the JAR code pretty much ticks a lot of the boxes. It's an excellent starting point for anyone that wants to find out about any project that's out there in the public. But it is essential that you focus on priority issues if you want to get the job done quickly. Just a simple example I give there, you know, it mightn't be essential to know how much it rains in an area, but if you've got a nickel laterite deposit on a tropical mountainside, it could be quite important. One there I'm just going to home on very quickly is, you know, if the geology is wrong in your due diligence study, you found that out, quickly it will lead you to look at the resource, which will normally be rubbish if the geology is incorrect, and that leads on to what we would call a fantasy net present value. And resource estimates, they're very much like a tripod when we look at them. You've got volume, grade, and density, and there are three areas we home in on when we look at projects. What really underpins a project value? Well, as far as we're concerned, if there's a project has been taken far enough in a feasibility study and it has a resource or a reserve, we really do home in on volume and density. They are the main value drivers when you're looking at tonnages and projects. And the geology, with talking about the in situ grade and recovery ratios, they really determine at a very, very early stage whether you've got a project or not that's worthwhile and that will drive an MPV. Time is of the essence. I won't labour on this fact, but we do take a top-down approach, a very structured framework, and we do concentrate on the critical elements, as I said, looking for the quickest fatal flaws that we can find. We do avoid trying to go through everything. Sometimes you just can't get through it all. Finally, you have to be able to stand up and defend yourself when you come up with your opinions, transparency, and you have to be justified in the approach you take. Just quickly on the opportunities side, I suppose I'm not going to stand up here and talk about projects and say, these are the projects you need to go and invest your money on, because look at, I'm not that much of a fool. But I suppose identifying a successful project, really, you've got to take the emotion out of it. The common mistake that we find amongst people we advise is that they're actually seduced by the project, and even common sense can go out the window. You need to be able to ask the right questions and be able to find the weak spots in a project quickly. And I would suggest, to the investors out there that will be knocking on the door of all the people out there displaying their project wares today, that depending on the different stage of the project or where it might be at, maybe to have a look at asking some of these questions. First of all, do you understand what commodity you're dealing with? Is it something that people are getting excited about? Where is it located? That's really all about sovereign risk, and also maybe getting project materials in and out, getting a project started is something that you've got to take into consideration. I won't labour on those, but again, if you want to take note of them, these are normally the way we push these queries and questions. These are some of the things we ask ourselves. So I hope that will be of some help to you out there today. And thank you very much for your time and attention.